Next, we have an interactive workshop on digital SME lending and retail payment. Our keynote facilitator for this workshop is Mr. Monis Rahman, co-founder and CEO of Dukan e-commerce. And joining him for our workshop co-facilitators are Dr. Imran Ashraf Usmani, who's the vice chairman of the Shari'ah board at Meezan Bank, and Mr. Khurram Warraich, who is the group head digital lending of Telenor Microfinance Bank. So Monis, Dr. Usmani and Khurram Saab, if you can join us on stage, then we can kick off the session. And just an announcement again, if you go to the conference website, digibap.com, you'll be able to see a live streaming of this event also.
Assalamu alaikum. This is a very challenging spot because we are between you and lunch, and it's always the hardest spot. But I think it's time to roll up our sleeves a little bit. So if I could ask people to sit down, I think you'll enjoy what we have to talk about here. So first of all, I'd like to really thank Hamza Hashmi and the TerraBiz team. This event was an idea after we saw the circular of State Bank and realized how important it is to hold an event like this. But it's just been amazing how Hamza and the team have executed on this and assembled all of these amazing people in one room. So a round of applause for Hamza Hashmi and the TerraBiz team, please. I am very lucky to have on stage with me Khurram from EasyPesa. Many of you know him. These are, in terms of SME, supply chain loans and lending, probably one of the most experienced individuals in the country. Whoever's in the lending field knows of him and knows of the wonderful things he's doing. You'll learn a lot from him after I brief you on sort of the landscape and a tech infrastructure needed for this. And Dr. Imran Usmani, I think every one of us have heard of him and the wonderful work he's doing in Islamic finance. Most of us have engaged with him and his organization for advice. So with that, I'm going to begin. The topic at hand is digital SME and retail payment digitization. And this is a bit of a workshop, a bit of an overview. So let me just start. It's been very heartening to see the common themes have been reiterated over and over again. It makes my job a lot easier, although I seem a bit redundant because I'm going to repeat some information. But it's showing that there's a consensus of where things are going. So 170,000 of 4.5 million SMEs, and the numbers we're hearing, it's probably 6.5 million. It's larger, 3.5%, maybe 2%, whatever the number is, it's incredibly low. 40% of the GDP we've heard over and over again, 80% of the non-agricultural workforce, but this is not a unique problem to Pakistan. IFC estimates that 65 million SMEs, 40% of MSMEs in developing countries have unmet financing needs of $5.2 trillion every year. So it's not just Pakistan, it's all over the emerging world. Same issue. And just to highlight this a little bit, there are incredible analogies, which I think you'll be hearing about as we go through the day in other geographies, which are so analogous to what's happening in Pakistan, supply chain ecosystem, payment ecosystem, and the rush to implement supply chain financing. Just these markets alone, you're seeing about 170 million SMEs and the market size of almost $1 trillion just here alone. And there's a lot of analogies between these markets, but let's stick to what we're doing in Pakistan. I just want to illustrate that we're not unique in where we are right now in our ambitions. So, supply chain, what's a supply chain? I'm just going to go through this very quickly. I know everybody understands what supply chains are, but I want to highlight the complexities in supply chain and then systematically work through those and figure out how we can credit score and enable loans through the supply chain. Start at the top with the manufacturer, the supplier, the producer of goods. The producer of goods gets the products into the market via distributors. Often it's a master distributor, then a sub-distributor. These are hierarchical in nature. And the distributors have a very interesting offline workflow, which is fairly complex and very inefficient. Inside the distributor's shop, we see there's a warehouse, there's inventory, he has order bookers, they go on field routes. They have a salesman who goes and does a delivery, who does cash payments, their returns. This is all offline, it's happening on the back of a napkin. They're reconciling on some laptop inside a warehouse. One day later, the supply goes out, payment is often cash. There's a big burden in that cash. And then it finally goes to the retailer who waits for the order booker, who runs out of cash and therefore cannot buy anything else. So if you're not in with the retailer as a distributor early in the day, aapki sale nahi hogi. Ye sari cheezein isme hain. And this is a massive opportunity. It's complex, it's offline, it's disconnected, and it's undocumented. And I think as we heard in the last panel as well, Amr Ali Saab was talking about this, and he said that it needs an ecosystem. He's absolutely right. There has to be an ecosystem that's interconnected, otherwise we cannot score this undocumented transaction chain. So what types of loans are there in the supply chain? Well, you can go up and down the supply chain. You can give loans to the distributors. You can give loans to retailers. You can give loans to FMCGs. And there are various types of loans that we can give throughout the supply chain. I've just highlighted a few of them. I think you've heard of a lot of them. I'll just go through them quickly. You know, it's purchase order financing. Basically, you're providing funds to a supplier based on the downstream orders they have. This means you must know the volume of downstream orders. And again, we're talking about an undocumented economy. But if you have granularity into downstream orders, it's easier to give the supplier finance because you know how much money is going to come back in. Their inventory financing, I think we know about this. You basically give loans and you secure those loans against inventory. Again, it's securitized against inventory. There's receivable financing, invoice discounting, where there are loans against outstanding payments. We also know this quite well. It's common. And supplier financing, reverse factoring, which I find very interesting. This is, the loan is initiated by the buyer, the store, and the money is given to the supplier, but it's claimed back from the buyer again. And I'm going to speak more about this because this has worked really well for us in Pakistan, and I think it's very instructive. And of course, there's distributor financing, which is basically the largest loans that are going to distributors to buy supplies from the FMCGs and manufacturers. So this is a rough sort of a map of the kind of loans you can do in the ecosystem, but you'll see that all of these require data. They require reliable data because this is informal. And so when we talk about technology, what we're really talking about is building technology that allows us to track transactions throughout the ecosystem, starting from the consumer paying the retailer, paying the distributor paying the manufacturer, and not just paying them, but having visibility on what they're paying for, what is the basket that they're buying. And once you have a combination of these, I know it sounds like a holy grail, I've made it sound so simple, but it's such a complex problem to solve. Once you have these, it actually becomes fairly easy and low risk to score. Then the other problem is, well, these are small fragmented loans. How do we scale this? Human intervention, going out and meeting them on the field. So all of these are challenges that technology solves, and I'll be speaking a little bit about that. So, okay, so here are some learnings. For supply chain financing, for retailer lending, there are a couple of things that turn out to be more important than others that really move the needle. So I'll start with KYC and establishing a business owner. One of the biggest areas of fraud, surprisingly, is if you don't do your KYC properly and a loan is given to a retail merchant, but it turns out that the person you gave the loan to is not really the owner. It's his brother, or he's not even affiliated, and the field sales team has played a trick on you. So establishing identity of retail store merchants and ensuring that they represent those stores actually is one of the biggest things we can do. And I'll be speaking about how we can accomplish that, but that's critical. The next thing is proof of payment. So once transactions are going, you're using those transactions on retail merchant networks to figure out what is the buying capacity, what is the turnover, what is the margin that this retailer is able to produce. So a proof of payment, if you have a payment going through a digital channel, cash has moved. It's not just an invoice that you're examining. This is real money that's moving. The third is understanding the basket of goods, what's being bought. And for example, if you ask for a loan because you want to place a bet on a betting site, it's much higher risk than if you ask for a loan because you want to buy stock on which you make 15% and you turn it over every 3 days and you've been doing it for 3 years. It's a very low risk loan. So understanding what you're using the money for, what the money is being used, the consideration, and being able to, last point, finance specific SKUs based on data and based on history makes these loans far more reliable and less risk. If I can track what retailers are buying, how often, how frequently, for a period of time, I can finance just that basket. And the money that we talked about earlier is going directly to the supplier. It's not going into the hands of the retailer. And it's going for stock that he's been purchasing, she's been purchasing for a long time. And we've seen evidence that they're able to turn over that stock, and we understand the margin on it. So now it's just economics. You've done the KYC, the economics work. The retail merchant's always going to pay you back because they're making a multiple on the money that they get at the cost they get it. So this is the magic. It's not rocket science. Why do people repay you? Because it's in their self-interest. Because they get another loan and they buy more and they grow. And you're seeing about a 30% uplift once you put these loans down to the retail merchant network. So it's big. So everything everybody has said has been absolutely spot on. Now the key is, in order to do this, you need documentation. You need that trail going from top to bottom, which we don't have. So the lack of documentation up and down the supply chain makes it slow, difficult, and expensive because you have to verify everything manually. And this is why nobody gives them loans. The basket size is small, they're fragmented, it's not interesting, it's way too much work. And we still don't do a good job scoring because we don't have reliable data. So what do? Dukan builds digital banking software and e-commerce infrastructure to connect retailers, distributors, and manufacturers to embedded financial services. And like was spoken on the other panel, I think Amr Ali Saab again spoke about this. The banking industry was invented ages ago. It almost seems absurd today to go drive a distance, take money out of my wallet, put it into a bank branch, drive away, and when I need that money, drive back again and grab that money and use it and pay a fee for it. So the banking ecosystem infrastructure was not built for embedded finance. And where banking services naturally belong are directly in the transaction flow. When you're ordering, when you're about to pay. That's where it naturally belongs. You don't want to switch an app and go someplace else and do 5 or 6 other things. Because the other problem that's created is that the data is fragmented. My purchase data is happening on this app. I'm buying from here through an e-commerce app from Unilever or another manufacturer. The data isn't synced, therefore I cannot do the things that I just spoke to you about on the previous slide. So it has to be interconnected. The ecosystem has to be interconnected. And sort of that's what we do. So we create white label stacks that we provide to banks and other providers. We're really hitting a lot of scale with EasyPesa. The EasyPesa's team here, they've done an amazing job. A round of applause for them. The Karabar app that they launched is really scaling very, very fast on retail networks with distributors. Loans are flying. It's a frictionless experience. So if you want to learn a little bit about what was done, I think this is a great team to speak to over here in the front. So we spoke about various pieces of this supply chain, right? It seems like a very, I'm going to rotate over here a little bit. It seems like a very tough problem to solve. So the pieces of our chain, the pieces of our software stack, this is technology now. You know, it starts, I'm going to start at the bottom of this. It starts with the consumer. So today in Pakistan, State Bank has launched RAS P2M. We've heard about it. I've got some sound boxes up there, QR codes, scan them, get instant voice notification, payments made, no need to open an app and wait for internet to spin. I'll speak about that in a bit. Money comes in, the retailer gets some money in a digital form. So now there's digital cash into a wallet. This is big because one of the problems in lending is digitally collecting the cash and not having to physically go and get paper cash. Now with this cash in, not only can you digitally collect your loans, but the retailer is now able to pay The distributor through a digital channel. That was pillar number 2, evidence of payment. I know what he's bought. I know that the payment has been made. Those rails are laid. So that's where we start at the bottom. We can now score retailers based on their income from consumers through P2M, ROS, QR code transactions, which I think are going to be a game changer, as we spoke about earlier. Iske baad, where does that money land once you pay? It has to land into a banking app. So the retailer, when it's scanned, gets a banking app, but that banking app has to let him do more than just collect payments and pay the money onward. That retail app, this is the digital banking app for retail merchants. This is where he orders his supply. This is where he pays the merchant. This is where he gets credit based on the footprints that he's leaving in there. So this is a very important piece of our stack. And then you have the distribution management ERP. The distribution network of Pakistan I spoke about, it's fairly offline. It's very complex. They work on the back of envelopes and napkins, the order bookers, whoever knows how FMCGs work. And by the way, it works the exact same way in Africa. I was just in Ghana, same thing. Indonesia, same thing. So this is a common problem that we're talking about. So we have a distribution ERP that lets us digitize distribution operations, payment collections, inventory tracking, order booking, all real time. So now we have this data on a digital stack going all the way up to the distributor. And finally, you have the FMCG, which has accounts in commercial banks and large banks that are dealing with their distribution networks. And they have complex invoicing, demand notes, reconciliation, workflow management, and payment, which is happening through banking rails, but it's not being captured. Payment and what the payment was made for. Both of them have to be captured in order to score. And there's no reason why we cannot add that onto the banking rails. And that was the third piece of what I was speaking about. So this is our stack. It goes up and down the supply chain. And let me figure out how to go backwards here. That work? Yes, that works. So the top is a transactional banking portal. So our software stack stitches all of this together, interconnects them with a unified wallet, so you're able to track all the way up and down both income and expenses of everybody in the supply chain. All of this is live, by the way. This isn't just theory. This stuff works. So why do this? Well, we heard some amazing people on stage speak about all of the reasons to do this, and they make a lot of sense. But when you drill down to the supply chain, you'll see it makes a lot of sense for everybody in the supply chain. It makes sense for the bank. The banks get accounts across the supply chain from the retailer, from the distributor, FMCG. All those transactions are flowing through the bank's rails. It earns float, transaction fees. And once this data is flowing through banking rails, it's able to be credit scored, and you can lend against it. When you lend against it, it's far more profitable than the transaction fees that I think are currently being enjoyed. It's more than the float. And more importantly, banks have a center stage now in this new economy which is being created. And that's critical. FMCGs is very obvious. They get instant payments from distributors. It's a big pain point from FMCGs. The movement of cash, the delay in getting payments from distributors, all of this really adds up. It's a capital-intensive industry. So getting instant digital payments is a really big win. This is one of the reasons FMCGs are very eager to work with banks, and they say, help me solve this problem. That's where it starts. But not only that, but once this money is starting to flow through their rails, then you can give credit to their distributors. Another problem, because they're tying up capital with their distributors, or their distributors are locked in with their capital. They all want to get their capital out, and these loans are very reliable, and therefore they're not growing. So distributors, obviously, it's also, they're able to pay FMCGs through a digital channel. They're able to collect money from their retail merchants through a digital channel, which means they can pay faster upstream. It all flows upstream. And they're able to get the bank to finance basket purchases that are being credit scored by banks. So now a bank is picking up the burden of the financing. Retailers are getting loans. They're buying more from the distributor. Distributors are getting loans. They're buying more from the supplier. And the cash flow cycle just spins. And retailers, obviously, they get a one-stop app. Retailers, they have 5 or 6 apps. They do some things here. They do another thing there. But banks haven't captured their use cases and giving them good reasons to stick around. There isn't really a good reason to stick around with a bank as a retailer right now. Until they connect their supply chain, they give them lending, they allow them to pay their distributors, they allow them to earn extra money. And the moment you do that, the value proposition for the whole ecosystem is very strong. One of the other themes that we talked about has to be interconnected. We can interconnect to each other. We must interconnect to each other. We have great people here, and I think one of the things that we should all leave with is that this can only happen if everybody does this together and we interconnect our software stacks and we collaborate. The faster we do that, the cleaner the data, the more money everybody makes, and the faster these SMEs grow. So it's about collaboration. It's about integrating the ecosystem from top to bottom. So just a pictorial sort of representation of our intercept points here. This is supply chain. You have a transactional portal that allows manufacturers to invoice and collect payments from distributors. You can credit score that. We've got a credit scoring engine there. We plug into LMSs. You can instantly start to give loans against the payments from distributors to FMCGs. Those are large quantum loans. One layer down, there's a distribution management system, so distributors can go online and they can now start getting orders directly through an online, offline app. Their operations are streamlined, and now, because they're on this stack, their retailers get loans, which is very valuable to them, and they get digital payments upstream. The retail merchants, I think the real star of the whole show is this retail merchant banking app, which I think is very critical, that allows those retail merchants to expose a RAS P2M QR code, allows them to get cash in, allows them to pay up. This becomes the center spoke of the entire ecosystem. And then, of course, on the consumer side, the ability to pay through a digital channel. These are more details on sort of what each pieces of the stack does, but it's a very elaborate stack, and it's all interconnected. Now, if there's a distribution management system that's used by another manufacturer, you can integrate with that here. If there's a banking app that's used by them, you can integrate that here. The key is to integrate everything so you have visibility of the data up and down the supply chain, and you plug it into your credit scoring engine, and you're able to give instant loans, disperse them through a digital channel, free cost, do KYC through a digital channel, you've opened a bank account, do collections through a digital channel because those retail merchants are getting cash in through these, through QR codes, through these sort of sound boxes, which I know a lot of us are now working very hard to get into the network. Now, in order to do this, there's lots of software needed, right? So we spoke a bit about the transactional banking portal, the sort of things that this needs to do in order to solve the problem of credit scoring distributors so they can get loans to buy from FMCGs. This is that transactional portal for the supply chain. So it's doing a lot of things here, but it plugs into the banking system seamlessly through APIs. This is the distribution ERP. Now, this is very complex. I think we spoke about all the offline pieces, and I've spent numerous hours with distributors in their warehouses and their storekeepers and their order bookers. So these are the essential pieces. The order booker, like you'll see there's a picture of an envelope on the left side. This is actually a real picture of an order booker after his routes that he goes to the warehouse and says to the key punch operator, these are my orders. They enter it in some system. They don't even know if they have inventory at that point. So this stack integrates the inventory, key punch operator, cashier, storekeeper, delivery man. So everybody is now interconnected. We have very clean data, and we have data of payments from retailers, as well as the basket, what actually they're buying. So now you're able to credit score all of that as well. And then finally, this is a retail merchant super app. I think this is going to be the centerpiece if we want to crack this puzzle, and probably the hardest piece, because everybody's avoiding going down to the retail merchant level. They're small, they're informal, they're very hard work, small loan sizes. So having a digital app in which you are reliably capturing what they're doing, especially the relevant signals for your digital scoring, is essential. And that's what the retail super app does. It has a built-in pause, so they can tap on glass, they can process a Visa card or a MasterCard, it's built in. The caveat here is only 25% of retailers have the NFC needed to do this, but it comes out of the box. So they can now accept credit card payments. ROS QR comes naturally out of this. This is integrated to the rails of the bank. It can expose a ROS P2M QR. We can connect these sound boxes to it instantly because all of the software layers needed to manage these terminals and connect them and credit score them are already a part of the stack. So day one, you can plug in any sound box from any manufacturer you want, and you can start credit scoring that retailer just on incoming transactions. Once that money is in, the retailer can buy stock from the distributor. You can connect the distributor through this, through the other layers I mentioned. They can get digital loans. They can participate in committees. They can repay those loans. They can sell top-ups, bill payments, virtual goods, and they can do fund transfers. This is what retail merchants need. So we need to start thinking about them, their specific use cases, and integrating financial services embedded in the whole chain where we capture our data. And finally, this is the last piece of the stack, which I'll speak to you about. And let's see if I can make this work. So a lot of us are working on ROS P2M QR codes. We're working on how to put them up into retail. And it ends up, there's a really big stack around this. I'm going to just show you a transaction here. So this is an example of a sound box here.
Dukan box पर 456 रुपए मौसूल हुए.
So why is this interesting? Well, we already had the ROS P2M QR. Why it's interesting, this is a nuanced point. I just want everybody to appreciate this. This is an internet speaker. It costs about $12 after you get your duties and everything in, probably like $18, $20. Why is this important? Because this costs so much less than a POS machine, $300, $400. And the biggest thing, and last panel they spoke about this, is how do you reconcile your payments? You're paying somebody's Easy Pesa, Jazz Cash wallet, it's probably somebody else, such a Agai payment, screenshot bhejo, it takes time to do it. As I'm working on my countertop, I'm the only employee, as I'm selling and dealing, I know you owe me 340 rupees, you pay it, awaz aa gayi mujhe, I move on. And this has been tremendously successful in China, it's been tremendously successful in India with UPI, and it's going to be tremendously successful in Pakistan. It's a nuanced case. It doesn't mean you have to have a sound box, you can just scan a QR code. But these small nuances, like how long it takes a retailer to open up their phone, check if the transaction has come when he has a line of people waiting, this makes all the difference in usability. So the last part of our stack is this entire layer of a terminal management system, which you can manage your devices, retail IDs, map them back to the bank accounts, and have this MQTT server. I know I'm talking about a technical terminology, but you need this entire stack in order to have a unified acceptance from your devices and your QR codes. And why is that important? Because if it's not unified, if you buy sound boxes from one vendor and he says, use my TMS, my terminal management system from my Chinese vendor, and you buy another sound box from somebody else and they give you another software, now you have to reconcile across all of these softwares, it defeats the purpose. So I think it's very critical for the financial institution to have centralized terminal management systems and MQTT servers that everything talks to. It gives you a central point to credit score those incoming transactions, which I think are going to be very low-hanging fruits for the entire industry. So these are the various components of the stack. They're stitched together. We've integrated about 9 manufacturers from China. So we said we shouldn't be reliant on just one. So we've customized firmware, it speaks Urdu, and you can customize an infinite number of these. It's not where you buy the soundbox from, it's a commodity product, it's how you connect it back into your sort of software platform. So this is the technology stack through which you're getting data that you're credit scoring, you're creating your rules engine on it, and you are dynamically, instantly dispersing, credit scoring, KYCing, and collecting. This has never been possible in history before. All of these tools are live now, they're available in the market, and it's just a matter of us and our imaginations to scale this, because we can really make a dent in the GDP of the country. So I'm going to just leave you with a quick video, if I could ask you to just play a video, and then I'm going to ask Khurram to come and talk to us about more of the technical aspects of once you have this data and this technology stack, or something like this, how you use that data to actually give scoring. And Dr. Usmani at the end is going to basically tell us how to ensure that this is Islamically compliant. So I think it's going to be quite interesting. If we could just play the video, please, then I'll hand it over to Khurram. Here we go.
दुकान बॉक्स पर 1250 रुपए मौसूल हुए।
Thank you very much. It's been a pleasure speaking to you. I will hand you over to Khurram Saab, and I think we'll learn a lot.
Assalamu alaikum and good afternoon, everyone. Thanks, Monis. I hope everyone can hear me loud and clear. So I think most of the people have discussed about the potential of SMEs in Pakistan, so I will not go into details. I would just like to share our learnings because we launched Easy Paisa Karobar app earlier this year, which is now scaling up very nicely. So just to share the thought process, basically we at Easy Paisa believe that in the SME sector, retailer or a merchant is actually a very integral part of the ecosystem. And those merchants and retailers actually comprise the most significant part of SMEs. So what we realized actually was that from a perspective of the retailer, there are actually three main challenges which they face while taking a loan. Number one, there is no formal product available in the market, or if there is available, there is a significant lack of knowledge, number one. Number two, it's also challenging for them in exchanging their business information because at times they don't have time in order to share that data. And number three is the credit innovation from the retailer side, right? Because there are no product as such available for the retail side. Similarly, from the financial institution perspective, like Easy Paisa and Telenor Bank, from our perspective, the business KYC is actually a missing leg because most of the retail outlets in Pakistan are actually not registered SMEs. So these are normally owned by the retailer individually, and different people actually serve them. And number two is the lack of availability of the data, right? So in order to solve all of these problems, we did three main things. Number one, we partnered up with Dukan earlier this year, so that retailer should have a front end where it's a kind of a one-stop solution for them, number one. Number two, we partnered up with different FMCGs and distributors because, I mean, FMCGs and distributors do have knowledge कि कौन सा दुकानदार क्या चीज़ खरीद रहा है and what's the frequency. So that partnership is actually helping us out in terms of serving the missing data leg. And third is the credit innovation. So we have also set up a cloud-based high-tech technical solution, which is now live in the market. So these are the three things that we do. And then when it comes to, by the way, do we have my slide? Because there was one slide on the credit scoring. Otherwise, I can verbalize. That's okay, right? मैं वैसे verbalize कर देता हूँ, right? So, जब product हमने launch कर दी market में with the name of Easy Paisa Dukan, then comes the most important part, which is the credit score. कि किस merchant को हमने कितने पैसे देने हैं. उसमें what we have seen in the last 1 year, there are 3 main important aspects which we should keep in mind. Number 1, how to link the business KYC with the individual KYC when it comes to merchant lending, because जिस तरह मैंने पहले explain किया कि अगर एक दुकानदार है, एक वो चला रहा है, तो उसका business is not registered in his name, right? कभी उसका भाई होगा, कभी उसका कोई दोस्त होगा. So the most important aspect is to get individual and business KYC and to link those. This is the missing leg which actually takes most of our time, number 1. Number 2, to establish कि ये बंदा इस business में कितने अर्से से है. So generally, as a rule of thumb, we take minimum 6 months of business activity of that retailer. And number 3 is actually the volume of the purchases that he does from his merchant and ticket size और उसकी frequency कितनी है. So I think अगर आप KYC ठीक कर लेना तो more than half of the problem is solved, right? और उसके बाद we focus on कि उसकी frequency कितनी है purchase करने की from the distributor and then ticket size and all those things. So if you can get sort of these 2 things, then retail space में फिलहाल there is no sophisticated algorithm involved, unlike consumer loans, जिसमें हम we do follow a very sophisticated data science built algorithms. Retail side पे KYC is half of the problem if you can solve it, and then these 3 KPIs in terms of volume of business, उसकी frequency क्या है और उसका ticket size क्या है. These 3 things can actually serve 90% of the problem, and you can actually allocate a credit score to that merchant. And then moving on, this is my last slide on the, if you can move on, right? So in terms of key metrics, normal जो हमारा lending का business है, इसमें we do talk about NPLs and disbursements and PAR and all those things. However, in this case, engagement is very, very important because RF की line खोलना is an easier part. What we focus on कि किस frequency से वो retailer हमसे engaged है. And then the other part is the market penetration, right? If we have a target of around 10,000 merchants, how quickly we are moving, right? So at this stage, where the industry is and where Easy Paisa is, the NPL and disbursements is the secondary KPI. The primary KPI is how much market share or how much penetration have we done so far. So this is by and large all from my side. Bottom line is it's not a very complicated business, right? The only thing is, I would like to reiterate, to establish the connection between consumer and business KYC, number 1. And then if you have a simple 3-4 KPIs of their turnovers and volumes, I think your lending the CN 90% is sorted out. So this is all from my side. So over to Imran Saab in case he wants to add anything.
Dr. Imran Usmani will just be here in 1 minute. So maybe we should use this time while he's rejoining us on stage. If there are any questions, we can have those answered right now by Khurram on his slides and presentation. So I'll open up the floor if anybody has a question. This is a great time. Ji, please, Asif.
How much you're charging the retailer, in terms of the financing cost?
So it's 0.1% per day. So APR is 36%. Yes. Sorry?
So the question was, what is the markup rate and what are the defaults that are being seen?
So APR is 36%. Default abhi nahi hai because हमने ये business शुरू किया around 6 months ago. So I mean, still it's too early to comment on the default. लेकिन what we have seen is कि अगर आप इसको score कर दें with respect to the KYC and the 3 KPIs, I would say it's around 5%. Right. But still, I mean, it's not more than 6-month-old vertical. So I mean, the PAR and the NPL is too early to comment on this. Right.
Any other questions? Yes, we have one someplace, sorry. In the back, right there.
Yeah, my name is Bilal Ahmed and I'm from Premier. We are a distributor. Pakistan's one of the largest distribution house. We have almost 40 plus principals working with us. question number one, are there any, for example, supermarkets working with you as SMEs, for example, for the loan and lending? Because we as distributor are already financing them free of cost. If you talk about 0.1% per day, that makes about 3% for the month. Right now, they are taking this lending leverage free of cost from a distributor. So why will they shift towards you and taking the lending and financing from you? Number one. Number two, we are already, for example, this is overburdening our finances and our cash flows because it's like hitting us and we are giving advance to the company already. But we are not like supporting this to the industry. So what is taking us like, for example, in terms of lost sales, if they don't have the cash, for example, or if their lending is like, for example, if they are like finished with their lending limit, what they have given us, it goes into the, for example, lost sales. Because we are financing their inventory, we are financing our inventory as well. So how like Dukan or Easy Paisa will like cope up with the situation?
Right. So first to add, ये जो हमारा पहला project था, the M2D का merchant to distributor lending, this is our first project. In terms of the roadmap, we have also launched this service जिसमें हम target करेंगे to the online markets. So there are quite a few online players who are working with us, but only for the payment leg, not for the lending leg, right? So जो आपने explain किया ना, this is exactly the reason कि I mean you guys will obviously have a limit to fund your partners, right? So इसमें players like us comes into place, जिसमें अगर हम KYC करके रख लें और उसकी credit scoring करके रख लें, so I mean we do have this part of the roadmap, and yes, we are talking to quite a few online wholesalers for this lending products that we have.
They are taking like free of cost financing, and from you it will be like 3% from their profitability.
Yes.
So how will you convince them to like take out from their profit and give it to you?
देखिए, as long as they will get free funds from you, obviously वो opt नहीं करेंगे, right? Lekin end of the day, as I said earlier, free funding will have a limit to it, right? You can't fulfill their unlimited needs in terms of lending, right? उसी वक्त वो हमारे पास आएंगे when they know कि it's robust, it's state of the art, और वो instantly लेंगे. लेकिन I mean, as long as they are getting free of cost, obviously no one would like to pay for it.
This is Javed Idi here. First of all, thank you very much for the wonderful presentation, Monis. ज़बरदस्त, आप काफ़ी अरसे से ये काम कर रहे हैं, मैं देख रहा हूँ, जहाँ दुकान आपने पहले स्टोर dukanstore.com से शुरू की थी, and now it's complete creation, ideation, from then creation and to the reality. So congratulations on it. Secondly, Hamza Saab, thank you very much for inviting us, and it is a wonderful session. All industry experts are here. I'm sorry, I'm just trying to say these words, very important. मेरा जो सवाल है वो थोड़ा सा इससे कुछ रिलेट है जो अभी रिटेलर ने किया है. वो बड़ी सही बात उसने कही कि आप वैल्यू ऐड क्या करेंगे, नॉट ओनली टू यू बट एज ए इंडस्ट्री. अभी एक सेशन हुआ था, आमिर साहब ने और हुसैनी साहब ने और सब ने डिजिटल की बातें की. हम डिजिटल पे तो सब बात करते हैं, बट जो मेजर प्रॉब्लम है वो ये है कि डॉक्यूमेंटेशन ऑफ ट्रांजैक्शंस. वी हैव अ पैरेलल इकोनॉमी गोइंग ऑन, देयर इज़ नो टू क्वेश्चन अबाउट इट. हाउ विल यू मेक श्योर कि हम उसको करें. नंबर टू, हमारे यहाँ कोई डेटा प्रोटेक्शन लॉ नहीं है इस चीज़ पे. उन चीज़ों के लिए जो फंडामेंटल्स जिसको हम कहते हैं, जो हुमायूं भी कह रहे थे, हाउ विल यू हैंडल इट. सेकेंडली, इसके ऊपर टैक्स रजीम क्या कहती है, बिकॉज सबसे बड़ा डर लोगों को क्रेडिट कार्ड को यूज़ करने में भी यही था कि जी ये हम जो है ना क्रेडिट कार्ड पे ट्रांजैक्शन इसलिए नहीं करते कि टैक्स नेट में आ जाएंगे. फिर वो एक टाइम लगा उनको समझाने में, टैक्स नेट में नहीं आएंगे आप, इस चीज़ से कोई नहीं आते, आपके कैश फ्लो भी होता है. But reality of life is that every retailer has a multiple books, and how can, under these circumstances, you can support multiple books. Now you have to support 3 books. One book he is already managing, the other book which he is managing himself, and now there is a need of a 3rd book which you are talking about. So I'm also in this field and I'm trying to crack this कि इसको करें तो कैसे सॉल्व करें, what incentive उनको मिलेगा. जैसे आपने कहा कि जी रिटेलर मेरे जब उसको फ्री मिल रहा है तो आपके पास क्यों आएगा. आपके पास इसलिए आएगा कि आप इसको ऐसी चीज़ देंगे जो स्टिकी करेगी और जो उसकी फैब्रिक में डे टू डे में उसको ट्रस्ट वर्दी बना देगी. जैसे वेदर देखने के लिए हम अपना फ़ोन देखते हैं, कहीं और बात नहीं करते, हमें पता चल जाता है कि वेदर क्या है. तो समथिंग लाइक दिस हैज़ टू हैपन. It takes time definitely, but these two things which जो आप कहते हैं कि जी percentage of the taxes, sales, provisional tax, एक आपका customer जो है वो बलूचिस्तान में है, एक इस्लामाबाद में है, एक पंजाब के उसका है, और कराची में एक अलग, सिंध में अलग है, उसके रीजनल टैक्स अलग है, उसको डबल टैक्सेशन का भी मसला होता है, एक ट्रांजेक्शन होने के बाद वो कहाँ से पे करेगा. So have you thought on these? Because मेरे लिए ये अभी तक I'm in a banking for the 30+ years, but it's mind-boggling कि how to solve this puzzle.
Javed Saab, great insights, great questions, as always. So first, I want to talk about documentation issue, staying part of the informal economy and not jumping into the formal economy, which is an obstacle to adoption of all of these great things we're talking about. And I think this is the first question. Often we don't try because we think this is going to be the bottleneck, though no point in doing it. Now it turns out, if you go to a retail store today, and we all go to our neighborhood stores, just go to your neighborhood store, ask him if you can pay him with Jazz Cash or Easy Pesa. I'm willing to bet 95% chance वो कहेगा हाँ ठीक है मेरा ये account number मुझे दे दो. He's already documented. He's already getting transactions into a banking channel, banking rails. And I mean, if we talk to our friends at Easy Pesa and Jazz Cash, they can run a filter on their consumer wallets and tell you how many are actually using it for business transfer purposes. So we're seeing that very quickly. Yes, there's a resistance to joining the formal economy, but because the convenience that this new digital economy affords, the convenience of paying online without having to go to the bank branch, take cash, hand it to somebody else, is adding considerable value, and it's convincing people, okay, it might be worth joining the formal economy. You put credit into that. Now they're able to get credit and they're able to buy more. They're able to actually grow their business by joining the formal economy. And I think one thing that we've seen across India as well, India is a great example, other countries, the benefit of joining the digital economy, once you get this whole ecosystem interconnected, is a multiplier on the amount you would lose on having to pay taxes. So I think ye hawa chal rahi hai. The boats are also already sailing that way, whether they like it or not. The noose is getting tighter. More and more people are joining. In my view, it's a matter of time. Will it ever be 100%? Maybe not. Will it be 50, 60, 80%? Probably. I think that's where it's going. Especially now you have this ROS P2M QR, which has made it incredibly easy for any merchant to now collect cash in a digital channel. So you're absolutely right. But I think if you look at the way the wind is blowing and the way more and more retail merchants are joining the formal economy, I think there's something to be very hopeful about.
Ji, thank you very much. There is no two question about it. It's a wave, we have to go through this, and crests and troughs aayenge. I just want to share the real life example of these type of things. I decided to buy some gadgets, which includes electrical testing equipment, some pressure pump and all these things. So I went into the wholesale market, which is into the Kori garden. And I got money with me, but I said okay, I'm going to try this time to pay via digital. I went to the smaller shop. He accepted the digital. I'm very happy. Jazz Cash, Easy Pesa, something like this. Then I went into the top-notch importer, those who got the right fluke equipment and all these, which are of the quality from Japan and all these things. Went there and they said, yes, we can accept. And I was really surprised. Okay, we can accept the digital. But what they have given me, he has given me 3 different numbers and said, कि ये Easy Pesa है, इस पे दे दे, ये Jazz Cash है, इस पे दे दे, और ये है, इस पे दे दे. Means actual transaction which is supposed to be documented and become a credit facilitation service for us has gone, because Absolutely. I've spent 40,000-50,000 rupees on 2 shops, and 3 transactions which I've done are of Muhammadin, ABC, CDE. Means these are the accounts which they keep to run their parallel economy. Correct. And they carry out these transactions. So when it comes to the consolidation and realization, like you said, SKU of a specific merchandise, हमें काम कर रहे हैं, आप बहुत अच्छा कर रहे हैं, मैं मान रहा हूँ, बट इस एरिया को आप ज़रूर देखें, ये एक ऐसा एरिया है जहाँ पे पिलफरेज इतनी हाई लेवल की है कि आप डॉक्यूमेंट कर ही नहीं कर पा रहे हैं, एंड देन द रिजल्ट विल बी अगेन ऑल योर एफर्ट्स माइट नॉट गो इनटू द वेन बिकॉज वी आर अ डिफरेंट नेशन इन दिस.
So even if 25% of these merchants join the economy and they take loans, the number is massive. It's a huge number. And as I was saying, I think it's going to increase over time. Aapki jo baat hai, it's interesting. I won't go into too many details, but if I'm seeing 3 transactions, I'm going to credit score them on just one. So usko jo loan milega, it will be a much smaller loan than he deserves because he split up his transactions. So I think you're absolutely right. These are real fundamental issues. But when we go into the field, and I think the Easy Pesa team is here, and Shehzad Saab is here, he's going to be speaking on a panel next. He can tell you the experience of the conversations they have directly with the retail merchants. They're doing this, one merchant at a time, payments, loans, de rahe. So I think in the next panel, we should actually ask that question of Shehzad Saab and get some real field-based information. With that, I would like to invite Dr. Usmani to speak to us on the Islamic aspects of how to finance your supply chains. Usmani Saab.
Bismillahir Rahmanir Rahim. Nahmaduhu wa nusalli ala rasulihil kareem. Amma ba'd. It's really very good and an honor for me to be here and listening to all these speakers, distinguished speakers. So my part is to provide you that what is the Sharia compliant solution for any supply chain financing. So inshallah I will go through that if time will permit me, inshallah. Before that, I would like to mention one thing, that day before yesterday we had a very good seminar in Federation House, and there were so many businessmen, and you know that these are from the supply chain side, either from FMCG or from the supplier or from the vendors or different types of people. And all of them were unanimous that we have to get rid of riba, and we should try to avoid that all transactions should be Sharia compliant. So if we see that the whole economy, whether it is a financial included or not, so the depositors who deposit their amount, so they are the basically supply chain people, either merchant, vendor, or distributor, or FMCG company, and then maybe corporates. So corporates which are being used by the all money, or maybe 50% of the money, is 0.01%, something like that. But the remaining depositors, they are not getting as such benefit in our country to get benefit of their own wealth, which are being deposited into the banking sector. So why they are giving to these deposits to Islamic banks, and their growing rate and their growth rate is so high? Because they want to avoid riba, and they want to interest-based financing, interest-free financing. Here I would like to mention that what is the Islamic finance? In simple word, I would say that the Islamic finance is doing trade but not doing interest. What is interest? Interest is mentioned here that it has been defined as kullu qardin jara naf'an fahuwa riba, that any loan that derives or that requires any profit out of that is riba. So there are so many Quranic verses and ahadith about the eating riba, or any person who is causing the eating riba has been cursed, and anyone who is witnessing or who has been involved in documentation or assisting in the interest-based transaction. And I think by all of these people who have discussed today, you have known that what is supply chain. So supply chain starts from consumer or from the end user it goes to the higher to the corporates where that particular product has been produced. So there is a very big chain, maybe starting from corporates, then FMCG companies, then different types of distributors, and then the vendors, and then merchants, and then consumers. So why they need the Islamic finance? Basically, as Brother Monis has mentioned, that in each sector sometimes require financing for their short-term working capital. So this is the requirement of the short-term working capital finance for their requirements, and Islamic banking basically provides them some products to cover that. As we have mentioned that in supply chain, we have distributors, we have vendors, we have retailers, we have suppliers. So in Islamic finance, we will do the supplier financing, we will provide the merchant financing, we will do the distribution of FMCG companies financing, or invoice financing or receivable financing, which is called factoring or discounting, or working capital finance or running finance. So what are the products? As I mentioned to you that only lending money out of extra premium is not allowed. But doing different types of businesses, like doing murabaha, musawama, which are Arabic terms, but easily we can say that buy and sell with profit, with deferred profit, or we can do tijara, which is a product of the Islamic banks, where we use the wakalatul istismar, the investment agency contract, in which we enable to the borrower to buy on behalf of the financial institution and then sells to the end user, and then he will return the money with the profit, because the principal is bank, and whatever he makes, basically it is made for the bank or financial institution. So then the agent will be given a particular agency fee, and the remaining, for example, if banks say that I would like to have around 20% or 25% out of your all proceeds, so then the remaining amount have been given to as incentive to them as per the repayment days. So this is how that running finance also has been done through this Tijara model. And invoice financing and receivable financing is also being used. It is, you have heard about that Abhi they are using the earned financing product. So basically this is a particular charge card product with the wakala or collection agency agreement with that. So this is also permissible according to Shari'ah. So it is very much similar to that. It's a working capital financing is also allowed through different modes like murabaha, musawama, etc. As I mentioned to you that it is like a triangle. In the upper side, this is the corporate, then they are supplier, and these suppliers provide the raw material to their corporates to manufacture or to produce the goods, and then it will be again given to the suppliers or distributors to divide, and then vendors, and then the distributors, and ultimately go to the end users. So the whole chain is called supply chain, and it is very very important that once we finance them as per the Sharia ruling, so it will basically bring the fair distribution of economy as per the Sharia. Because in Sharia, this is very much important that your money, your all wealth should not be concentrated in few hands. So nowadays, although all Islamic banks are doing Islamically halal, but as we are in the stages, so we are not providing that the all money given back to the these supply chain people easily. And I think after coming these digital era, it is easier to give them through digital financing to these people, unless otherwise it was very much difficult because having much resources for that or more expensive transactions. One is, you have heard about BNPL. BNPL is a simple buy now, pay later. So it is being done through different modes like Musawama or Murabaha. The difference in between Musawama and Murabaha is that in Musawama, the cost price is not mentioned. For example, like Kist Pay is providing the mobile phone within 6 months and they don't have any profit out of that. It is called 0% because they earn from the commission from the Kist Pay. And then, for example, if it is a larger than or longer than 6 months, so they may have some profit. So they have a commission plus profit. So it is, therefore, it is being used Musawama, that because the cost price they do not want to mention, just sell price they want to mention, which comprises of the commission as well as profit. So as I mentioned to you that sometimes BNPL is being used through Murabaha. Murabaha is very simple, that you have to tell the cost price and the selling price, which is the paid by the customer on deferred payment basis. So this is the process flow. I think I should not go to that one, process flow, that how, because it is very much important that in the Islamic transactions, that everything should be in a process. You cannot do something which could be done later on earlier, because if you do that, for example, if you sell a thing before you own, so it becomes a short sale, and it is not allowed by Islam. So therefore, it is necessary to follow a particular process. But it is easier even in the digital format, because we have the blockchain or a smart contract within these particular portal. So once you use that particular portal or platform, so everything will be done automatically. So the customer will sign or accept the smart contract, as well as he will do the all process as per the sequence made in the platform. Otherwise, usually in the manual banking, it was sometimes, it is an audit issue, that sometimes the signature may be of the after the transaction, or maybe of the later date or something like that. So it is easier there. As I mentioned to you about the Tijara, I mentioned that it is a Wakala-based contract in which there are two options or two variations in the transaction. One is that it is used for the running finance or working capital finance, whereby some inventory has been bought by the borrower, and remaining inventory he wants to get it financed by the financial institution. Or the other second variant is that the whole inventory he wants to purchase or to buy, he needs cash flow for that. So for these things, Tijara is being used, in which, for example, if the 100% inventory is being used to purchase on behalf of the financial institution, it is just simple Ijara, simple Tijara or simple Wakala. But if it is the 50% already has been purchased by the borrower, and 50% is being purchased by the inventory by the wakil or agent on behalf of the financial institution. So it becomes musharaka. So we use sometimes musharaka or diminishing musharaka also in that particular type of transaction. So that was the process flow, and I think we should, because of the shortage of time, we should leave that. There is one illustration, as I mentioned to you, that, for example, if you have purchased a thing, there was on July 1, distributor availed Tijara financing by selling a stock against a price of 20,000. Distributor get amount of working finance for working finance needs. Distributor agreed to sell these goods to end users as an agent of the bank. As an agent, distributor is required to sell these goods and collect proceeds from market. Now, basically, as I mentioned to you, that the remaining amount is being returned to him as per the incentive of the, and it is calculated as per days. So the formula is that financing amount multiplied by bank's profit rate is divided by 365 days, basically is the value of the incentive of per day. So if whenever he defers per day, so that amount he will lose that. Alhamdulillah, as Brother Amir also has mentioned, that we have done, Alhamdulillah, distributor through the Meezan Bank, 270 distributors available financing via digital platform, 31,952 transactions disbursed, and 29,975 transactions settled, 27.5 billion disbursed, and 25.8 settled successfully, Alhamdulillah. So FinTech partners, Hubble, an in-house team was with us in that type of transaction. Last but not the least, that sometimes these supply chain people, they need a fixed asset financing. So it is very easy that simply as you do for consumer financing for car ijara or house financing or diminishing musharaka or other like leasing, so you can use all these modes of financing for that and to cover for long-term financing for their basically fixed asset financing. This is my presentation. Thank you very much. Jazakumullahu ta'ala. Thank you. Assalamu alaikum.
Bahut shukriya. May I request Hamza Hashmi to be on stage, also to be joined by the CEO of Habib Metro, Khurram Shahzad Khan Sahab. All right. And Rahmat Hasni Sahab, if you could kindly join us on stage. And Sayyid Amir Ali from Meezan Bank, if you could kindly join us on stage and help us thank our panel. So Monis, thank you very much for the session. And if I could request a memento to be given to Dr. Imran Ashraf Usmani, who's the Vice Chairman of the Shari'ah Board at Meezan Bank. And also Mr. Mohammed Khurram Warraich, who's the Group Head Digital Lending at Telenor Microfinance Bank. And just if all the gentlemen could just join for the photograph while I announce that we can now break for lunch, but our time to come back and into the hall would be about 2:15 so that we can begin our next session. We do have a couple of people joining in online, and we'd like to resume the session as quickly and promptly as possible. So enjoy your lunch, and namaz is also, a venue for namaz is also available. So we'll see you in about 45 minutes. Thank you.